Right. Um, okay, shall we begin now? Good evening to everyone, or good afternoon. Welcome on behalf of Young Professional Society and our collaborators, STEM Matters. I'd like to welcome you to this very important webinar, financial technology, fintech, opportunities, and the threats. We've been holding these webinars now very frequently on a weekly basis in collaboration with STEM Matters, who are based in the USA. And today we're very, very honored to have a distinguished speaker who will be speaking on this very important topic. And just before we go on to um, our speaker, just like to say that our collaborators STEM Matters, so hopefully we should have people joining us from the US as well, and they will be joining. We are live streaming on Facebook as well, on the Young Professional Society webpage, and also on the STEM Matters. And at Young Professional Society, Young Professional Society YPS has been set up to help youngsters with personal and professional development. And we focus on three areas: communication, trying to help youngsters with soft skills, so they have better speaking, oral speaking, writing skills, better effective communicators. Also about leadership and innovation. So these are the sort of three pillars that we work under to help youngsters and try to help to transform their lives so they become better, successful professionals. So if you want to know a bit more about YPS and if you want to become a member or so, these are different ways that you can get in contact with us. Firstly, you could see our website, www.ypsociety.uk. We're also very active on social media, on Facebook, LinkedIn, Instagram. We have a YouTube channel, a Twitter account as well, and we have email. So these are the different ways that you can get in contact with us. And all the webinars that we've been doing, you can see the recordings on our YouTube channel. And our collaborators, STEM Matters, are based in the USA, and their vision is to enable students to innovate, invent, and deliver quality solutions to contemporary challenges. So they've been doing a great work, and they're based in Texas, in the United States. And I think what I will do now is I will introduce our speaker, Professor Hussein Abdou, who is currently the faculty director and the deputy dean of research within the Lancashire School of Business and Enterprise, with a demonstrated history of working in the higher education industry. He is a highly skilled researcher who freshly applies artificial intelligence, AI, modeling techniques, and methodologies into banking, finance, and accounting research. Professor Abdou is qualified in analytical skills, leadership, lecturing, risk management, etc. He's well knowledgeable professional with robust background in inter-ally building, scoring models in developing countries, fintech applications, and its disruption to the financial industry. He's also a professional trainer in big data and analytics, fintech applications, risk management, scoring, modeling techniques, and Islamic finance and economics. Professor Hussein Abdou developed a notably strong research profile resulting of more than 45 international peer-reviewed journal articles during the past 8 years. He's a member of a number of professional bodies across the universe, including the RMA, IFABS in the US, BAFA, HEA in the UK, and EAA in Europe. Professor Abdou is a keynote speaker in a number of international conferences, including Interli, DIFC 2020, FMA 2018, and many more. So Without further ado, I would pass over to Professor Hussein Abdou, who will give his lecture on fintech. Professor Abdou.
Thank you very much, Nasser. Appreciate it, and thanks for the invite to give that speech and talk about fintech opportunities and threats. I'm going to share my screen with you guys now, so you can see the presentation. Can you all see it now?
Yes, yes.
Brilliant. So I'll keep this short, concise, as I might not be talking to professionals within the fintech industry. So I'll try to give a little bit of introduction about the fintech industry, even worldwide, and how this works. So my outlines for today's presentation is as follows. I will give you a little bit of background about my expertise within this topic. Then we'll hit into what's fintech growth and facts, how the fintech is shaping the current financial services industry. We compare benefits versus risks of fintech as well, and how the fintech is landscaping the whole industry as well. We will discuss gaps and opportunities, key future opportunities, and the main takeaways for you as young professionals. So let me start briefly with my own background. My academic background actually is in banking and finance, where I hold a PhD degree in banking, and particularly in developing credit scoring models for conventional banks. This has been extended massively across different areas related to banking, including credit risk management, more recently fintech and artificial intelligence. One of the early people who used artificial intelligence in financial applications within finance, accounting, and banking. I'm a specialist in using neural networks, different various types of neural networks and genetic algorithms within financial application. My professional background is quite different, which is in building credit scoring models in a number of developing countries, as you can see on the screen, including Egypt, Cameroon, Vietnam, and much more. And more recently in fintech applications, and extended to evaluate software packages for financial industry in the US market. I am also a professional and experienced professional trainer who deliver a number of training courses across Europe, extended to Middle East, and worldwide, which mainly focus on big data analytics. We all know now the concept of big data and how big data is important, playing an important role in a massive number, large number of industries, including NHS, for example, health and care, education, even airline companies, and much more. Fintech disruption of financial services and how fintech could help or become another competitor to the current existing financial institutions, scoring modeling techniques definitely, and Islamic finance and economics. Widely published a large number of international peer-reviewed journals during the last 8 years in a number of elite leading journals worldwide, discussing various issues around neural networks, artificial intelligence, in different areas such as capital structure, earning management, and IFRS as well in accounting. I'm currently the editor-in-chief for Cogent Banking and Finance Journal. It's Terrell Francis Group. On a number of international journal editorial boards, like Nasser kindly stated, including International Middle Eastern Finance and Management, Journal of Banking, Finance Letters, and much more, refereeing nearly more than 30 journals, international peer-reviewed journals, and a member of international professional bodies, including Risk Management Association in the US, BAFA and the Higher Education in the UK, and EEA in Europe. I've been invited to a number of keynote speech worldwide, including most recently the FinTech North in Leeds, that was back in 2017, and the FMA 2018 and the Doha International Finance Conference, Islamic Finance Conference back in February 2020. However, my final message is I still got a lot to learn. And that should be your perspective as well. Don't think that you've learned it and you know a lot, because every single day you have to learn something new. You have to gain new piece of information. And if this will become your attitude, you will become something in the future. So heading to FinTech, I thought it might be just useful to give you a bit of introduction about FinTech. What's FinTech? Let me just try to hide this little screen from here so I can just see clearly the screen. I think that would work fine. So you can see that FinTech is a very dynamic expression. And people use expressions like FinTech to explain the interaction of both financial services and technology, where the technology developed by startups, technology firms, new market entrants innovate these new products and services currently provided by banks, traditional, more conventional financial service providers. And the idea is to facilitate, to make life of their clients much easier, cost efficient, and to achieve their targets. So it can be said again that FinTech is another term that firms or these new startups, FinTech firms, develop to innovate technologies. And those technologies are around customer services, online banking, mobile application, payments, big data, alternative finance, risk management, all in all, just to make clients' life easy, to achieve their targets, and to have that such potential. So it can be concluded that it's a term including finance and technology. So FinTech, fin refers to finance, tech refers to technology. It's clearly obvious here. And the use of technology in financial services industry results in introduction to new innovative products and services using softwares. And when we talk about FinTech, you are talking about different types of payments, investments, advisory services. You're talking about insurance industry and takaful, and I'm going to touch this slightly as Muslim communities need to understand what the difference is between takaful and normal conventional insurance as well, and the opportunities in takaful industry, big data analytics, financing. This could be extended as well to artificial intelligence, robotics, and Internet of Things, as we're going to touch it quite soon. So from this little slight introduction, you can tell that there is disruption coming ahead. And those FinTech startups, those FinTech firms are disrupting more conventional, well-established conventional financial institutions such as banks, who used to provide services to their clients, and they are relaxed there. There is no competition apart from between themselves. And those FinTech firms come to the market with huge potential, and they provide much, much smarter and faster decisions, react more quickly to the decision, unlock new opportunities to the customers, and improving operational efficiency. And this is where financial services, particularly banks, need to wake up and to pay attention, because end of the day, in my point of view, it's a win-win policy if they work together. If you look to some stats, it's not a comprehensive statistics here, but just to give you an idea around how important, how growing, how fast growing the FinTech industry worldwide. Last couple of years only witnessed massive increase in FinTech industry, reaching over $12 billion. Within only the banking industry in North America, they spent in new technologies approximately 17 billion in 2015, and this has been increased in 2017 to $20 billion. So specific within FinTech, in my point of view, the development for banking industry is twofold. Developing knowledge and products where it will fit with such young people like Millennials and Generation Z, for example, as I'm going to explain it later on. Or in the other side is in training employees and customers. And this is where you need to prepare yourself to come to the market. You need to be ready, have the knowledge, because in my point of view, most of the firms now focus on tech and they forget about finance. And if you look from a banking point of view, they focus on finance and they forget about tech. And we need to create a new generation to have fresh graduates with knowledge, well-trained, well-established, trained in fintech. So they have the knowledge of financial side and the knowledge of the technology side. If you look to the global Islamic Economy Report 2019, they predicted that there is a strong growth which will reach $3.5 trillion by 2024. And when we talk about Islamic fintech, it's more or less the same like conventional fintech. However, in Islamic fintech, they have some restrictions, allowed halal products, allowed eligibility of using some of the technologies, and so on. So when you look to the application of fintech in financial services in particular, almost cover every single aspect. But most popularly, it's risk management and prediction, customer protection, security issues, expansion plans, banking operations, the short-term activities on a daily, weekly, monthly, social media analytics, and level of risk. And what I can tell you here, fintech firms, banking institutions start to pay massive, huge attention to social networks. Your behavior on social networking, whether it's Facebook, whether it's more recent like Instagram, Snapchat, or other applications, they start to follow some of their clients' behavior to identify their needs, to identify their behavior, their mood, their financial strength and creditworthiness, and much more. So that will lead to a final conclusion, which is competition between various banking have created this new fintech industry. And in my point of view, they can't work in two different directions. They need to work together to strengthen their position. So fintech can provide the technology and the new advanced technology. Banking institutions or financial providers can provide the financial services. Working together, I believe it's a win-win policy. But I can tell as well that those financial institutions and fintech firms need to work much more closely with their clients. So it will be a win-win-win policy for the three parties. And this will lead to a more constructive definition of fintech blanket term to disruptive technologies affecting the financial service industry. And you can tell now that there are high level of disruption by this high level of technology, and given the COVID-19 and the lockdowns we live in and the virtual world we live in as well, you can tell that we cannot predict that we are going to go back to the normal life that we used to live before. More like we're doing now, exactly. I'm sitting in my home, Nasser in his home, and you sitting, everyone in his city and his home, virtually meeting, talking, giving presentation. In normal life, we would have just a big hall or something and meet face to face and have our lecture or key speech. So this tells you a short story that life might not go back to the normal routine that we used to have. If you look at the growth of the industry, even back in 2017, 3 years ago, and I'm sure it's much more now, you can tell that around $25 billion deals value and more than 400,000 deals back in 2016 and 17. If you look at the ecosystem of fintech as well, I'm sure you're aware of a lot of this stuff here. If you look at the payments and transfers, for example, how many of these you are aware of? Like PayPal, Klarna, Venmo, and much more. Samsung Pay, Apple Pay. We all use it, isn't it? We all part of this payments and transfer fintech. Lending and financing as well, non-financial institutions. You have a lot of examples here like Ox Money, like Credible, like Orchard, a lot. And retail banking, this is only examples across the world from GBank and WeBank in China and much more. If you look at that function here, it will tell you a lot of stories that conventional banking system are facing high level of competition from new startups, people and firms who can provide financial services while they are not financial services specialists or providers. I'll give you a simple example. If you try to apply for a loan, for example, short-term loan, personal loan for home development, for holiday, for wedding, whatever it is. And you go to one of the platforms like Money Supermarket, even Zuba or whatever. You would find the lowest interest rates from service providers such as Sainsbury's. What? Sainsbury's is a retail store where we buy our food and drinks and other stuff. And they provide now credit cards, loans, even car insurance. And myself, when I applied for a loan the last couple of years, I had the lowest rate ever from Sainsbury's and Tesco. And this gives you an impression. Yes, they have a financial license to offer financial services, but they are not financial services provider by nature. But they might work under the umbrella of one of the leading banks as well. That's absolutely fine. But however, they provide much cheaper services, faster, timely, meet your purposes and decisions within 1 second. This is a reflection of the technology. And you can imagine now, if the data is the fuel, so I believe the term artificial intelligence, new technologies, is the engine of this digital revolution in the world. If you look more into the fintech, when fintech shaping the financial services industry, this is from a recent report in Islamic World, in Global Ecosystem and Momentum from IFR 2018. They have identified those areas where greater automation from insights to activity, artificial intelligence, big data analytics, and quantum computer systems. And this linked with the back office where they have to develop a lot of technology and products, new products. Moving to the middle office, they focus on mobility. They focus about a new term called open banking and B2B, peer-to-peer lending. And I'm going to touch it in some more details during my presentation later on. And moving to the front office where they meet with their clients, they focus on blockchains and cloud and cybersecurity. But the final conclusion here is there are a number of services here could be provided, including deposits, including trade finance, treasury, wealth management, insurance. 7,500 fintech firms globally have raised $110 billion since 2010. Massive, unbelievable. 58 billion raised only in 2018. And this gives you how important is fintech industry now, not only in the UK, not only in Europe, but worldwide. I'm not going to touch China or US because completely different markets. So the question now, we are users, what we are looking for on our daily activities, normal things we do in every day, electronic payments, transfers, bill payments. How many of us, may I ask, how many of us now using their mobile phones to pay bills? I would say all. If you look to millennials, and millennials, those people who are aged between 22 to 38 years old now, and they are a bit older compared to the Gen Z, which is Generation Z, who are around 21 years old or less now. And those people have completely different view compared to, I would call, old-fashioned, where they used to have cash dealing with the bank. We are looking for much more electronic payment system. I use my mobile phone to make all transactions, all bills. There is a new technology now, I'm not sure if you heard about it. They will use your fingerprint to make payments. So every one of us fingerprints is very unique, very special. It will be linked to your bank account or one of your cards. And whenever you're out, if you forget your credit card, your debit card, you just put your fingerprints on a specific machine with high technology. It will link it straight away using encrypted code, like blockchain, for example, to be linked to your credit card or bank account and take the money. So there is no excuse if you forget your credit card or debit card, nothing gonna change. So you will just scan your fingerprint, link it to your bank account, make a payment. Can you imagine how fast growing is technology now? We're looking for a lot of other things, identify, verification, and that's why if you look to the technology, for example, that Apple used recently, face recognition, this could be used as well for payments. Every one of us face is unique, like the fingerprints as well, and so on. So But most important, this huge list of what we are looking for can become available through fintech, through financial technologies. We are looking for more robust, fast, accurate, secured financial services using high level of technology. And if you look about the fintech market drivers, for example, unbanked. I was reading in some of the reports, I think 51% of the whole population now worldwide are unbanked. They still prefer not to deal with banks, they prefer the cash in hand, they prefer all this stuff. And if you look to developed Muslim countries, that 51% is up to 72%. Can you imagine? All these, in my point of view, are investment opportunities. How many of those populations, of those people live worldwide can you convince to use technology? If you look to the millennials, it's a different story. If you look to Gen Z, Generation Z, it's a completely different story. But cloud, mobile, marketplace, millennials, social media, it's the main drivers. People have research and questionnaires distributed to study the behavior of millennials, how they use social media, how social media affects your behavior and affect your financial spending as well. If you look in particular to some of Muslim countries, when they put some investments in fintech industry, in Emirates, United Arab Emirates, the Doha International Financial Center assigned $100 million to invest in fintech startups. In Bahrain and Malaysia as well, they have set up a regulatory sandbox for fintech growth. More than 93 Islamic fintech players globally as well. But if you look to the advantage of Muslim community, for example, the average age in terms of young demographics, average age of Muslim worldwide is 24 years compared to 32 years old globally. 15 of the top 50 countries, smartphone penetrations are Islamic economics. And as I mentioned before, 72% unbanked population in the Islamic international countries. When we talk about risks versus benefits, from my point of view, mainly the benefits are in transparency and of transactions. It would lead to a cheaper and faster transaction as well. You're sitting at home now using your phone, make a payment, cybercrime defense, financial inclusion, where you have the availability of using different financial services and access to use financial services. However, each one of these could be easily transferred to an risk or threat to the financial or the user of the financial service. And lack of government intervention is clearly a problem now. And governments need to put some regulations about fintech startups and the use of technology and the massive excessive use of technology. It is very volatile industry at the moment and has low customer protection compared to other or more conventional financial services. If you look to what happened after the recent financial crisis back in 2007 and 8, conventional banks become more conservative. They are very protective. They do not give loans that easy. They need to have guarantees and warrantors and while those competitors make life easy. So this will lead to sometimes, in some cases, in some countries, to terrorist financing as well. Other risks linked to fintech might include, like I said previously, the focus from those firms on tech, not fin, and they need to be much more experienced to the financial side. Cybercrime as well is a growing area. Data security and data protection. To what extent do you feel confident to share your personal information? And that's the idea behind open banking as well. Do you feel confident and trust your financial service provider to share your personal information, personal data with them? What about the potential user anonymity, which anti-money laundering risk, and this unclean money who get entered into the financial system to become clean, and this will cause inflation and other consequences as well. Increasing regulatory scrutiny and other issues as well. That's a snapshot from a survey has been done back in 2018 or 17 about the expectation of the millennials, of those young people, when they are asked about whether they prefer face-to-face communication with their clients as banks or not. And you can imagine now, more than 64% they have less than one visit to the bank branch in a month. Almost 40% of those people who surveyed, they do not visit the bank at all. And based on one of the reports I was reading just a couple of weeks ago, it says 57.5 million US millennials. Surprisingly, they prefer to move to a digital banking. And another proportion, high proportion, this 57.5 US millennials represent more than 3/4 of the whole millennium population in the US. Can you imagine this? It's really in my point of view, is scary a little bit that we will move digital. We will not use any physical, tangible products, or maybe the currency will transfer to a digital currency, like in cryptocurrencies, for example. But another survey showed that 1 out of 3 millennials prefer to go digital within 90 days only from now. And a similar proportion prefers to go totally online with no banking account. All these statistics are scary, guys. It gives you an idea about how fast we are moving towards the digital world. If you look at the traditional lending function, even we can use this for the more recent one called peer-to-peer. People are not going to banks anymore because of the high interest of regulations, the conservative policy they use. So some of us have additional funds they don't use. Some of us are in shortage of this fund. So there are some lending platforms like Funding Circle, like Zuba, for example, where they found that connection between those people who have surplus, which is the lender investors, and those people who have shortage, which are the borrowers. Make them meet together, lending based on agreement between them through that lending platform. When you go to the banks and fintech function, it's quite complicated, quite different. So any borrower, for example, if you follow steps here, like I did it for you here, any borrower, like myself, for example, apply for a loan through a lending platform, Money Supermarket, Zuba, any other one. Then through that platform, they will try to identify a lender who can easily commit to a borrower to pay the money. The lending platform now, in step 3, will try to contact the partner bank, which is the lender investor bank, to tell them that this lender is committed to pay the money. Then the partner bank provide the money to the borrower, and then the borrower provide the loan notes to the bank. Most of us will think that the process ended now. Nope, doesn't, because there is still much more. Then the lender gives cash to the platform, and the platform in turn gives this cash to the partner bank and receive the notes, and ending with the investor receiving the loan notes. Can you imagine how complex become? But using technology, on the other hand, it's much easier. Within seconds, you can finish that process. If you look here to the gaps and opportunities, within the front office, which is the red bit, within the middle office, which is the orange bit, or the front office, which is the yellow bit. So starting with back office, you can see here that there are some opportunities in terms of deposit and use of big data. That's something you need to pay attention to, actually, because if you look to the more recent published report, whether it's in Islamic finance or not, whether it's in other areas, the role of analytics and big data have played substantial role in disrupting the global banking system. And this is from identifying and engaging customers to reducing operation and their operating cost through deployment of machine learning. And machine learning is a much wider, bigger expression used to identify different types of neural networks, card, k-nearest neighbor, genetic algorithm, and gene expression, and much more. However, there remains substantial room for greater application of artificial intelligence and big data across not only Islamic finance, by the way, but other fintech industries. If you move to B, showing the link here, I can tell you clearly that there is critical and varied need for trade finance entering the blockchain, and I'll explain to you in a moment what blockchain means if you don't know it. But global trade finance is a $12.3 trillion industry in 2016, representing 75% of global trade, with total intra-OIC trade, which is the Organization of Islamic Countries, at $250 billion back in 2017, with 1.8 trillion in imports across the Organization of Islamic Countries. Can you imagine how fast, how big is the industry? And blockchain use in trade finance, where there is a need for substantial documentation and independent verification, all of which can be simplified through smart contracts, has been strongly validated now. Moving to C, which is the area where we use artificial intelligence and automation in wealth management. And I can give you an example of, there are a lot of examples actually of fintech startups, fintech institutions, one of them called Wahid Invest, which is an Islamic fintech, who is particularly important development. They developed and raised $12 million across seed and Series A rounds, solving a fundamental problems for Muslim communities and other areas. Moving to area number D, which shows some important aspects as well within Takaful. And Takaful is the Islamic expression of insurance. And you can tell that insurance industry is trillions of dollars industry. But how many of us feel confident when you have car insurance? You worried so much to have somebody hitting you from the back or front because this will raise your premium, isn't it? And the idea behind insurance, in my simple understanding, is you pay your insurance to be covered in case of any trouble. But the trouble is the insurance industry treats you that you have no claim policies. And if you have any accident, whether you're mistake or not, your no claim policy is gone and your premium is hell high. Oh my days. Doesn't make any sense to me at all. So that the careful industry has seen very limited fintech activities. And I can tell there are around 80 startups identified globally as substantial disruptors to the conventional trillion-dollar insurance industry, where you have more secured position when you come to insurance activities. Lastly, the other area for as an opportunity here, B2B, peer-to-peer finance, and next stage in its evolution. It's a substantial focus to date on fintech industry and in particular in Islamic finance. And the idea here is a platform designed to make the link between those people in need and those people in excessive need of their finance. Moving forward, so key priorities in my point of view for 2020 and based on some of the reports I have read as well. You need as a financial institution, as a fintech startup, to update your IT operating model, to get ready for the new model, financial institutions governance structure, new governance structure. Slash costs by simplifying legacy systems, for example, using SaaS beyond the clouds and adopting robotics and artificial intelligence. I was in touch with one of the companies, which is our service providers, and suddenly I've got something popping in the screen and said, a robotic system, I can help and answer your questions. You can tell how fast moving is this. Build the technology capabilities to get more intelligent about your customers' needs. I believe Barclays have developed an app for 17, 18 years old young people to identify their needs compared to the more established customers. Prepare your architecture to connect to anything, anywhere. And that's the concept. No barriers, anything, anywhere. You can't pay enough attention to the cybersecurity with all the hackers around and all people with high level of security abilities. And you need to pay attention to this, and it's very expensive as well. Make sure you have access to the necessary talent and skills. And this is where you need to come, guys. You need to prepare yourself with the necessary talent and skills to execute and win straight away. If we extend this to look to benefits of artificial intelligence, fintech is part of artificial intelligence. It will make life much easier, will take over routine and repetitive tasks away, perform complex tasks in timely manner. If you look to the capacity of one computer, it can do a lot compared to the human brain, for example. Generating numerous outcomes that are easy to understand, reducing risk, human errors, and the mistakes done by humans in the past. They complement human efforts, of course, because end of the day, I believe, and trust me when I say this, technology, computers are stupid, because who develop computers, who run computers? Humans. But the question is, how many human elements will be needed to run these computer machines? And I'll give you a very good example at the end. Artificial intelligence systems are generally more consistent and reliable compared to the humans, compared to old-fashioned systems. Integrated customer support solution can track competitors easy, efficient use of big data. And when I talk about big data, I'm not talking about thousands or hundreds of thousands. I'm talking about millions of observations. And there is type of data I remember called flying data. Particularly, this type of flying data is very famous across social networking. So when you have kind of data, this flying data described as the data will come only once a lifetime, and if you lose it, done. You can't get access to it anymore. Efficient and timely marketing can take customer relationship management to the next level as well. However, nothing complete, nothing perfect. Too difficult to develop a smart thinking artificial intelligence system. They can't think like human thinking. They can't be productive, intelligent to think about alternative solutions when they face a problem, a type of problem that they are not programmed to develop or face or interfere. Related ethical, moral, legal issues as well. That's completely big, which we can give whole lecture in it. Control from a few rich, wealthy owners of investment capital, and that's quite clear nowadays. Poses high negative impact on traditional skills and makes people feel disappointed. They have no chance. My competitors are much skilled compared to me, and potential increase of inequality, strong IT needs and data privacy, algorithms bias, because when you develop a model using data as part of any algorithms model, it depends on how many data are used in training process, which means in building the model. And clearly, the more the data used in training process, the higher the predictive capabilities and the less the bias of any algorithm you use. And then you need to use this trained data into a holdout testing or validation data to predict the predictive capabilities or of your model. Creating trust, that's another issue, particularly with those unbanked people. Computing is not that advanced because end of the day, it's a human who develop it. Data scarcity and probability as well, another issue. So main takeaways for you. Disruption of the financial services industry, particularly banks, is happening. And fintech, if not, is the main driver, but it is one of the main drivers, definitely. It reshapes the way companies and consumers engage different levels in terms of how, when, and where financial services and products are provided. Success is driven by the ability to improve consumer experience. Absolutely, customers comes first nowadays. And financial services need to be prepared to the forthcoming challenge by those fintech institutions. And decision makers need to pay full attention and be aware of the required skills and resources. I will end my short presentation with what Ramon Chavez, the Deputy Chief Financial Officer of Goldman Sachs, explains. Their companies back in 2000 used to employ in their equities trading division more than 600 humans. Nowadays, today, they have only 2 humans trading. The whole process is automated. Over 200 computer engineers. Shocking, scary. Over 600 people replaced by only 2 plus 200 computer engineers. Thank you very much for your attention, and more than welcome to ask any questions if you have any questions. Thank you.
Very much, Professor Hussein, for an excellent, very informative lecture. If you've got any questions, and those people who are joining us on Facebook live stream as well, if you could just type your questions. We do have 1 or 2 questions here on our Zoom chat meeting. Those of you watching, if you could just type your question. There's a question here. I'll start off by, what sort of return are financiers looking for in financing a fintech project? Are there opportunities for profit sharing arrangements?
That's a very good question, Nasser, actually. Thanks, Saeed, for this question. This depends on the relationship between the banking institution and the fintech provider. And most of banks now have their IT technology department in-house, but they can't compete that fast with the fintech providers. And I can't tell you a specific number about what sort of finances or what sort of return they expect, because it's all negotiable process between the 2 parties. But my understanding and my wish as well is fintech startups, fintech firms, well-established firms can provide new technology that the banks cannot reach or cannot develop within their current existing fund, current existing budget. And then fintech will offer a proposal to share the profit based on the use of this technology. This is how I see it simply, but I am aware of a number of collaboration between number of banks and fintech firms as well around the world. But it's a mutual agreement between the bank and the fintech firms, and there is no general accepted proposal, if you know what I mean. I will follow this by the rest of the question. How do you protect your idea for a FibTech project? This might be related to the blockchain idea. Those people who developed the blockchain, they developed the blockchain based on encrypted code, very complex, advanced, and with all the security level there is still even a small chance that people might reach and break this encrypted code for the blockchain. But the idea behind this, in my point of view as well, this is only an introductory part to move towards digital currency system, which means might be in the next 5 to 10 years, you no longer use any currencies, whether it's a dollar, UK sterling, Australian dollar, Canadian dollar, all these currencies might disappear and will be replaced by simply a digital currency, which will be represented in one of the blockchain like cryptocurrencies as numbers to be used across different activities to do whatever you want. And that's, in my point of view, something scary. And I don't know what we can do about it, but if it's coming, it's coming. I hope that addressed your question.
Okay, do we have any other questions? Yeah, and it was interesting, you mentioned that the banks are actually in the UK as well, a lot of these bank branches are closing now. And you say they're all sort of going towards digital. Now, if we're going more digital, then you can expect probably more fraud in that to happen, you know.
That's a very good point, Nasser, actually, because when you talk about cybersecurity, which is the hardware or software used to protect financial privacy or safeguard against electronic theft or fraud, and we've got a lot of real-world example like the iris scanning ATM, like the MasterCard biometric card, and the face recognition. In my point of view, banks and or fintech partners need to invest a lot of money, billions of pounds and dollars, in securing their systems. because cybersecurity is, and hackers nowadays, really clever, really clever. But it provides an opportunity to our young professionals as well. If they get ready and know what are the requirements to get into that sector, to get into that world, all they need to do is to prepare themselves by having the required skills in terms of tech and in terms of finance. If you want to be specialist in tech only, that's absolutely fine. But it would be a privilege, advantage above your peers, definitely, to have the knowledge of both tech and finance. Because only few people worldwide now can speak about fintech or that language, financial technology languages. And if you look to different types, blockchain, for example, which is a distributed ledger, encrypted ledger technologies with a primary application of financial services. And a very good example worldwide now, real example worldwide, Bitcoins, Ripple Payments Network, Visa Business to Business Connect, and much more. That's, in my point of view, only an introduction using cryptocurrencies, for example, to move towards the more digital world. Peer-to-peer is really good as well, Nasser. All these are opportunities. So what I'm trying to say here, as much as we have a reduction in the more conventional banking system job availability, a lot of opportunities have been created within the technology and the new fintech world. People specialists in blockchain, peer-to-peer, robo-advising, Internet of Things, which is a new expression, not very new, but people need to be aware of it. Technologies related to smart devices that gather data in real time and communicate via the internet. All these things, we have a reduction from one side, but we have much more opportunities in another side. But people need to be prepared to this kind of challenge, if you know what I mean.
Yeah, you mentioned that now because of this COVID-19, we're not going to be going back to our sort of normal way of life. Now, these opportunities you mentioned, maybe these opportunities are more for these big players, big businesses, yeah, who will be able to sort of survive, because even in COVID, some of the business like Amazon or even Zoom we're using now. So maybe the small businesses might not have them opportunities or might find it a bit more difficult. It's only the big players.
That's a very clever point, Nasser. Thanks for raising this as well. That's really good. If you look to big fishes in the market like Amazon, eBay, and other providers worldwide like Alibaba or AliExpress, they make profits they never made such in 3 months. They didn't make it in the last 10 years. And this gives me a very warning, alerting bell here that small businesses, young fintech or whatever other institutions or firms might not be able to survive or work unless they are working under the umbrella of those big fishes, which is another thing we need to think about actually. And are we creating here more opportunities for small businesses and young professionals to work, or we are moving towards what we called traditionally monopoly, which means someone control the market and provide services to whoever they want to give it. And Amazon, eBay, other Chinese big giant institutions, very good example of this. During the pandemic, everyone just was facing financial difficulties. Some of the small businesses shut down. Amazon reached the highest profit ever last 10 years. How we could explain this? It's simply, in my point of view, it's monopoly, is the moving towards controlling the market. Otherwise, if a pandemic is affecting one party or one sector in the market, they should reach it every single party. In any real pandemic, in my point of view, in any real economic crash, we can't have two different types, which one type will be affected and other type will not be affected. If a crash will hit, it will hit everyone. But if a kind of crash is hitting only the small, young, non-strong people or firms, and it doesn't touch those big, well-established institutions, in my view, that's not a crash. And we need to think about it carefully. We need to think about how we prepare ourselves to face such a situation if this happens again in the future.
Okay, do we have any more questions, Professor Hussein? Maybe if someone wants to unmute and ask, you can do, maybe Said. If not, we have been going for an hour now, and I think maybe as a closing remark or so, or final question, maybe what advice would you give to some of the youngsters who are studying in colleges or universities or so, and are thinking of sort of going into the finance or the banking sector? What advice would you give them?
First of all, you need to get ready in terms of choosing the right course, and not to do the course because you want to secure a job only, but you need to do a course because you enjoy what you do and you find it interesting, fascinating, and you can be innovative when you study such a course. But if you feel that this is the fintech, this is the financial technology industry, you need to be ready to find which institutions within the UK or worldwide, it depends on your financial ability, provide high quality financial technology courses, financial technology BA, undergraduate, or even a master degree once you finished your business, normal business degree. What you need to do as well is not to limit and link yourself only to the academic side. You need to be linked to one of the real market fintech startups or financial institutions. And even if you have a volunteer work to gain this practical experience. In my point of view, the next generation, they need to be academically and practitionally ready. They need to have the knowledge from more academic sources, and they have equally knowledge by real world case scenarios. So they need to have this kind of real field experience. That would be a very simple advice to those people. And my final remark would be, never give up, never too late, never give up your dream. Back in 2004, when I arrived to the UK for the first time in my life, I never expected I will finish my PhD straight away and become one of the youngest professors 9 years ago. So nothing impossible, actually. And no one can describe me as a super intelligent. I'm just normal guy who's working hard and identify my aims and objectives and know exactly what I'm looking for the next 3 to 5 years. And my advice to you as well, doesn't matter you're young or old, it doesn't matter what you're doing, you need to have a clear plan for the next 3 to 5 years, identifying your personal aims and objectives. And if you are working now, your institution or firm aims and objectives. And I will close with this one. Thank you very much.
Great. Thank you very much, Professor Hussein, once again for an excellent presentation and for a very useful Q&A as well. And I'm sure, thank you very much for everybody who's joined us today on the Zoom meeting, and also those people who are watching us on the live stream on Facebook. Thank you all people who've asked the questions. And like I said, that all our webinars you can find them on our YouTube channel. And if you want to know more about YPS and our collaborative STEM matters, then do please get in contact with us. I did put up the information on our different social media platforms and our website and Facebook, etc. So once again, thank you very much. Thanks for joining. It was great having you with us. And Professor Hussein, thank you very much once again for your interesting presentation and for all your advice. And I'm sure a lot of the youngsters who have been watching this webinar will find it very, very useful. So once again, thank you very much.
Thank you. Pleasure. With pleasure being with you. Thank you very much. I appreciate it. Thank you. Thank you. Bye.